Okay, we are live. All right. Let me get some more lights up in here. Right. So, what are we going to talk about today? Well, sorry about that. Excuse me. Planet 13. All right. A lot of analysis to be done on Planet 13. Um, I think that this was probably more so tailored towards a live stream, but because there's so much to unfold, and I have not really shared some of the analysis of my thesis um, thus far. So let me see here. Okay, Planet 13. They reported Q2 earnings. Okay. I have reviewed the earnings call and I have done some analysis, and I will actually be conducting some actual analysis during the live stream. Okay. How do I view Planet? Well, I view Planet as more of a semi venture capital phased investment that is, how do you say, a generational opportunity of growth. All right. The actual market TAM for this sector is incredible. Um, Let me see here. Okay. So, okay. Let me see here. It starts with an idea, right? If someone is going to invest in a company that doesn't make money, all right, the valuation is going to be a projection of future profits tied to an underlying story and thesis. All right. We're going to talk about that. All right. What do I see Planet? What's my thesis? And so forth. Shout out to all my subscribers. Shout out to Mr. Whiskey Dog. He is the inspiration of the thesis. Okay. So let's get into this. I'm naming it the Whiskey Dog thesis. This is Goofy's Mr. Whiskey Dog thesis. All right. And how did I come up with that? Well, Mr. Whiskey Dog is one of my subscribers. He is a farmer, all right, who plants seed and harvests and so forth. All right. And I believe he's interested in this company as well. All right. So Planet is a cannabis based company in that industry that services to entertainment. Okay. So that's one of the underlying things to consider. All right. So let's go back. All right. Let's start diving into this. All right. I reviewed the earnings call. What are some things that I got out of the earnings call? Well, analysts are trying to come up with projections of revenue, how the acquisition is going, um, and so forth. All right. There's a lot of excitement happening. They closed on the Vitacan acquisition. They paid 5 million for it, from what I'm tracking. 4 million in cash, 1 million in stock. Um, as you can see right here. Okay, so let's look at it. I think they now Planet has an actual slide deck from what I'm tracking. So let's pull that up. That was not included on Seeking Alpha from what I'm tracking, but here it is. Here's their slide deck. All right. And let's go to financials. They did 31.1 million this quarter. All right. That is that's an increase, all right, from a lot of these past quarters. Breaking the 30 million mark is impressive, all right. We did see a little bit of compression from the several quarters, but that's due to an industry dynamic. I hope this is coming in more clear. Okay. All right. So let me pull it up here. Let's do a deep dive. The Vitacan acquisition closed in May. Okay. So a portion of those revenues were recognized in this quarterly report. Let's go to the earnings. Let me try to find. Okay. Let me see. Press release. Okay. Okay. So revenues increased 20.3%. Okay. And we got to calculate how much of that revenue realized was from the Vitacan acquisition and for purposes of time to performance ratios and so forth. Let me pull up. I have a slide deck prepared. Okay. So this is going to go into a combination of the story and quant and the analysis that I look at and the different angles I look at and how I'm dissecting this earnings, okay, or how I'm digesting it. Let me pull it up like this. All right. I'll pull up the transcript. All right. So this is the takeaway from what I got from Q2 as far as the Florida acquisition. All right. The Vitacan contributed to 23% of total revenue. All right. 7.2 million contributed to 31.1, only takes under consideration 6 weeks or 1 month and a half, if you will. All right. So that's what I'm getting from the actual earnings call. All right. From what the management has guided. All right. My target expectation for a quarter is 14.4 million. So we will realize and we will continue to see revenue growth the next quarter coming up because those will count the Vitacans, all those Florida stores are going to start kicking in. So we should realize about 14.4 million from Florida. All right. Oops. So project 37 million speculation to a realized fourth quarter of the acquisition. Okay. So that's the total revenue. All right. So we had like 31. Let's go back to the financials of Planet. We had 31.1. The next revenue or in the next quarter, I'm thinking 37 million. Okay. That's what I'm looking out for. All right. There are 3 stores that are under construction in Florida, or maybe the buildings are already built, but they're just waiting to open them. And 2025 May projection of recreational potential. So they're going to have this vote in November in Florida to have recreational use. All right. DeSantis is not on board, is what I'm understanding. He is the governor of Florida. Now, that doesn't necessarily mean he can't change his mind. When an actual consensus vote happens in November and the majority of Florida votes to say they want to they want legalization of recreational use, I believe the governor will change his tone because he has his constituents to look after. All right. So True Leaf currently in the Florida market, True Leaf is the leader. All right. And they're doing double the sales in the Florida market. And as per store to store comparison, True Leaf, they have double the sales as averse to a Planet owned store. Okay. So they are the leader, and Planet is second in behind, but penetrating into the Florida market. So this is how I take that. If a True Leaf store is producing, I don't know, however much a year, we'll just make an example. Let's say a True Leaf store produces 100 grand a year. All right. And a Planet store produces 50 grand a year. These are not the accurate numbers. I'm just making an example. That means that the market has demonstrated possibility that it's possible to make that much sales. All right. So now there is a creation um, of targeting and penetration expectations. All right. It's demonstrated. All right. So that means the Vitacan Planet stores in Florida have the possibility to double their sales in more of a faster manner. All right. So that's something to consider. All right. Here are some, let's get into Nevada. Okay. Nevada's expectations. Okay. This is what's going on. Okay. There's 110 cannabis stores total in Nevada. 80% of those 110 are experiencing moderate to severe stress in the market for the actual slowdown for the consumer. All right. The Nevada market is getting contraction in a recessionary atmosphere to this industry, a slowdown, if you will. All right. I think there's little upside, and management is guiding little upside to a couple stores that are going to be opening in the Nevada market. But right now, when it comes to the state of Nevada, they're weathering the storm. All right. Um, so I'm speculating that there was a $1 million loss for Nevada, even after the Dazed Lounge, tattoo parlor, clothing revenue realization happening in the superstore. Okay. They're doing about maybe 100 tattoos a day. Um, and management has not given an actual revenue breakdown for the superstore in realization of that Dazed Lounge, tattoo parlor, clothing revenue, and all that. So what I think is happening is the store is selling less volume of flower, but the actual comp to keep them above water was realized through the Dazed Lounge, tattoo parlor, and clothing line, and so forth. Um, I know that's not what a lot of people want to hear, but that's how I'm taking it. All right. So I got a little bit of whole notes here. Gross profit margin expanded from 45.8 to 50.1%. We can continue to probably see margin expansion with with more logistical, how do you say, establishment in Illinois. Um, and cost synergies for taxes for the 280E and different synergies to establishment in the Florida market. And going back to Florida, the stores are open and they're doing good and they're getting a lot of sell through, but the infrastructure that Planet has for their vertical integration is not there, so to speak. So what I mean by that is a store will sell out, but they don't have enough product to restock, and that's due to the lack of vertical integration. So that's good in a sense that there's more opportunity for upside once they get that fixed. Um, but it's kind of bad in the sense to where I'm like, well, I hope we would have been more ready for this. All right, but it is what it is. All right, live and learn. All right. The balance sheet. There's still net cash. Let's look at this balance sheet real quick. All right. We'll go to valuation. So they got 26.67 million in cash. All right. However, this is not a net debt position. They have about 10 million in debt, and the rest of that is total lease liability obligations due to their real estate stores, if you know what I mean. So the actual amount of debt is in this actual metrics includes leases and capital leases and all that. All right. So that's something to consider. It goes under the cost of revenue and all that good stuff. All right. The California store is nearing break even. Illinois is where a lot of the logistical vertical integration establishment stuff is happening. Um, but they're going to be doing, from what I understand, they're going to be doing brand licensing to a lot of the established stores over there in Illinois, um, to the actual existing dispensaries. So what that means is, if you have let's say you have 10 dispensaries and one is Planet 13, the other 9 are different dispensaries from different companies. So Planet 13 will go to the other 9 and say, I'll let you start selling some of my product, the Haha Gummies brand and the Medicine Flowers, for a cut for the licensing and so forth. We'll start distribution, wholesale distribution for you all to sell our product. And that's pretty much what that means. Okay. The lifestyle brand building to set up for future, um, becoming the Nike of cannabis. So let's see here. Cheeto Vera. Okay, let's look up Cheeto Vera. All right, this is a UFC fighter. Let me see here. So this is the UFC fighter that Planet 13 is starting to sponsor. Nike. Nike used to sponsor basketball players for their shoes. Planet 13 is going to start sponsoring MMA, UFC fighters for their product. Okay. Same idea. All right. There is a lifestyle entertainment brand hybrid happening with Planet 13. Okay. Oh, this is kind of blocked off. Okay. So I think that there's potential here, because with this brand building, they have their own branded products, such as the medicine, the gummies, the edibles. They all come under this lifestyle brand, and they're using this marketing strategy to fuel and strengthen the brand so that the consumer has recognition. Okay. So there's that. I'm not tracking any other of the companies in this industry are using that type of target towards building the company. All right. So now we have brand licensing potential that can be worth several billions in decades to come. Okay. So we have a story. All right. Let's see here. Let's go here. Okay. How do I view Planet 13? We'll go back to it. This is to be viewed as a near venture capital investment, which is pretty much called seed investing. All right. It's not profitable, so the valuation has to derive from a story to the quant. All right. The story to balance the quant. All right. Let me try to full screen this so you can see the position. Okay. All right. So, how much is my story worth? All right. How much is my story and thesis worth? All right. The thesis is originally worth 10,194.87. Okay. That's how much it was originally worth on my cost basis of how much I've invested. Right now, the story is worth $7,933.55. This will change and fluctuate as the stock goes up and down, of course. Okay. But that is how I view it. Okay. The story has its own value. All right. And right now it's the value of the position. All right. Um, so we have to do projections. Okay. But let's get back to another angle that is in my actual thesis. All right. All right. Let's do some. We're going to have a biblical integration to my Mr. Whiskey Dog thesis: contribution to non secular, goofy investment angles. All right. So here's some of my analysis to fuel the story. A farmer went out to plant his seed. As he scattered it across his field, some seed fell on a footpath where it was stepped on, and the birds ate it. Other seed fell amongst rocks. It began to grow, but the plant soon wilted and died for lack of moisture. Other seed fell among thorns that grew up with it and choked out the tender plants. Still, other seed fell on fertile soil. This seed grew and produced a crop that was 100 times as much as it had been planted. When he had said this, he called out, "Anyone with ears to hear should listen and understand." Luke 8:5-8. All right. So I'm not making this religious, okay? But I do have biblical integrations in my theses. All right. And I believe that this applies to this investment. I have ears, all right, and I'm listening and understanding. So if and I'm gonna say this, okay? Not everybody is gonna understand this because not everybody was meant to understand this. The authorities above will only grant this understanding to certain people. All right. So with that, how much did this acquisition cost? How do I get this thesis into play? All right. So the acquisition aggregate between cash is 5 million. For cash and stock is 5 million. 4 million in cash, and 1 million in stock. Okay. So this godly quant translation to saturate the TAM position will make the Florida acquisition of Planet 13 sector worth 500 million. If we go back, we say this is what we see. This seed grew, the seed that fell on fertile soil. The seed grew and produced a crop that was 100 times as much as had been planted. I believe the Florida sector I believe the Florida sector is fertile soil to this industry. Okay. When it comes to investing in different industries, you have to put yourself in the actual management's perspective in this whole industry to understand. All right. Cannabis and flowers, they are plants. Okay. You plant seeds. You use seeds to plant. Okay. I'm putting myself in those shoes. All right. So I can translate and project out the thesis. Okay. If I was investing in a race car company or investing in Ferrari, I will put myself in a race car driver's shoes and a car manufacturer's shoes and be like, how much speed can I get out of this car? Weight to horsepower ratio. I'll start thinking about stuff like that as averse to the competitors. It's kind of just the same idea as what I'm thinking about with Planet, but we're in a pre-market or a how do you say, a premature industry. Okay. So, due to this godly and biblical translation, I'm going to say that 100 times the acquisition amount will realize. So, 500 million valuation years later to come, just in the Florida sector. But here we go. We got to look closely to the other, with the other, with the other analysis of it. Okay. All right. Some seed fell on a footpath where it was stepped on and the birds ate it. I believe this might be the California sector. I honestly don't. I think I wouldn't be surprised if this sector fails in several years. Maybe a decade later, we're divesting from California because it just wasted time and money and energy. It's not worth it. All right. Any of the seeds planted from the business in different states may cause a reversal to shareholder value. This will offset, all right? This is where um this portion of the verse comes in, all right? Other seed fell among thorns that grew up with it and choked out the tender plants. All right. So some of the other seeds planted in some other states will start, the revenues and losses will eat into the 100 times the good harvest. Okay. So that's how I'm viewing this. All right. Um, how am I gonna? So let's look at this pricing model. Okay. I have done. Let's look in my price target model. Okay. And let's see how I'm calculating this. Let me get out of here. All right. Let's go back. All right. I'm gonna try to get this. We'll go to earnings estimates. Okay. Next, forward for 2024, analyst consensus estimates are 28.43% growth to 126.5 million. Okay. Or that's for this year. All right. So I pretty much put that in there. We're in 2024, so I'm just going off consensus estimates. Now, after this earnings call, there was a bunch of analysts asking how to target the model and pretty much put out point blank that there's going to be a change to consensus analysts estimates. Okay. I think the analysts might raise this number. Okay. Because we're starting to hit momentum in Florida. Right. The acquisition was good. So far, the acquisition's good. It's bearing fruit, if you will. All right. Um, but for now, I'm going to play it safe with conservative estimates. I think these are conservative estimates. I got the company growing 39% along with analysts. That's 176.5 million in 2025. I think we boom in. I think we get more accelerated revenue growth in 2026 with the realization and expansion of more legalization in states. Okay. So that's how I'm getting 50%. That, along with the store count of how much revenue each Florida store is going to do, because they have the potential to double their revenues. Maybe that takes a couple years and they get up to 75%, or they take over another 25% of that TAM of market demonstration from the True Leaf stores. All right. So that's where I'm getting the 50% reaccelerated revenue growth, and that's a conservative base projection. All right. My 100% revenue growth target in 2027. I'll admit this might be optimistic, but this might take into consideration federal legalization. That may or may not happen, but who knows? It's a few years out. If it doesn't happen, I think 100% revenue growth is still achievable if they keep acquiring and they keep with a booming economy, expansion into other states. Maybe they do another acquisition. Who knows? I think 100% in 2027 is attainable. And then maybe in 2028, these things are harder to project out the more further you go out. All right. So I got 50% revenue growth in 2028 to 794.25 million. Let's say that the company does 5% net income margin. All right. Because this is a retail, this is a company of heavy capex and heavy expenses because of the real estate and our leases and all that. I think we get 5% net income, and I could be wrong, but if they do, let's talk about how I calculate this quant. If they do the 794.25 revenue, and they have a net income margin of 5%, I'm going to multiply that by 0.05. I come up with net income of 39.71 million. All right. So I'm just going to put 39.71. Okay. Now, if they achieve a 10% net income margin off this revenue, all right, we'll do the math again. 794.25 times 0.10. It's pretty much double of the 5%, but that's, once again, I'm just trying to demonstrate and reiterate how I'm doing the targeting. Okay. I'm going to put that down, 79.42, all right, as part of my model. All right, EPS. Okay, how am I going to get EPS? Earnings per share is net income divided by shares outstanding. So let's go to Target, or let's go to Target. Let's go to the financials. Let's go to the income statement, and let's look at diluted weighted average shares outstanding. All right. When I'm doing my projections, I always use diluted average shares outstanding as averse to basic weighted average shares outstanding, because there might be excess warrants, excess different types of derivatives out there that are dilutionary that count under this column. Now, as you can see, they're both the same, so that's a good sign. But still, I always use diluted weighted average shares. Now, how do I project out to 2028? Well, I look at their dilution rate on an annualized basis. All right. And I look at their diluted weighted average shares going back 5 years. And I think that maybe they dilute a little more. Maybe they do another acquisition and they dilute a little more. And I take that under consideration. So I take the average of these 5 years. All right. And I come up with a dilution rate of 65% of their shares outstanding. All right. 65% in the calculation of their current diluted weighted average shares outstanding comes out to 396.99 for their shares outstanding. All right. I take that count. All right. And we'll go back to the 5% net income margin of the actual profit of the company, and we divide that out through the diluted, my dilution rate and projection, or guesstimization, if you will. I know it sounds bad, but that's what it is. All right. And we divide it by that diluted share count in the future. All right. These are future projections of the profit of my shares, backed by the quant and story value of my thesis, the Mr. Whiskey Dog thesis. All right. Let me see, 9. That gets me to 10 cents EPS. So in 2028, I got them doing 10 cents EPS if their net income margin is 5%. All right. Let's do the math. If they're doing 39.71 million in profit, that's their earnings, and we assign them a 40 PE. That's a 1.588 valuation. Let's see if it just lets me drop it in there. Yes, it does. Okay. If we assign going to 50%, we do the math and so forth. All right. Earnings times the multiple of what we think this thing will sell for in the market. And this multiple assumes a decent market. All right. So let's continue to do this math. And this is how I'm building out my price target model. Okay. Now let's do our price target model. All right. Just because that's the actual 40 time, that's how much they're doing from a price to multiple, a price to earnings multiple, doesn't necessarily mean your shares are going to reflect 40 times or so forth. Okay. You take under consideration the 65% dilution rate. Okay. So 10 cents times 40, that's $4 price target. All right. 10 cents times 50, $5 price target. Okay. Let me see here. All right, and 60 times is $6 price target. Okay, we're keeping it simple, ain't we? Now let's calculate EPS if they had a 10% net income margin. All right. Voila, we get to 20 cents. Okay. Obviously, we already knew that because it's double the projection. So everything is pretty much going to be double. But I just want to, keep going. All right. Let me see here. 20 cents times 50. Oh, it's 10. All right. So $10. Okay. 20 cents times 100. All right. And if we get in one of those euphoric markets, the 200 PE takes under consideration the floodgates have opened. Legalization federally has happened. Nothing makes sense. They're just buying the crap out of this thing. Okay. So let's do the. Okay. Okay. So these things are possible. All right. This is the benefit of buying at such a cheap valuation. Let's look at it let me save this to my goofy Planet 13 price target model, which is aligned to my Mr. Whiskey Dog thesis. All right. Let's look at valuation. And let's look at a price to sales metric, because I think that there's a good chance that we will get a price to sales multiple to revert back to the mean, which is 3.7. So if they're doing 794.25, okay, and revert back to the mean, which was 3.70, that is a 2.9 million valuation on a rounding error. However, you take under consideration the dilution, okay? So I projected 65%. So now it's 1.910, okay? So the company will be worth, if it reverts back to the mean, we'll go to 1.91, okay? And that's after dilution, all right, from a market cap standpoint. And let's look at, or let me see here. I'm sorry. Let me pull it up again. Let's pull up the financials. Okay. All right. And we'll divide this by the market cap of the current market cap. That's a 12x. So the company if it reverts to the mean, if the company reverts to the mean and we hit these projections with dilution of 65% encountered, the stock you'll get a 12. I will get a 12. It's not financial advice. This is how I calculate it. It'll be a 12x. All right. Let me see here. If we're going off of price to sales metrics. All right. All right. So I think this was a pretty long video. I think there was no participants to this live stream, which is okay. This will just go into the YouTube historics, and people can go and backtrace and look at this video. Shout out to all my subscribers. Shout out to everybody that's going to watch this. If you're finding value, hit that subscribe button. Hit the like button. Consider subscribing to my Patreon. Link in the description below. You can hit me up if you have any questions about it, about this analysis, and so forth. I hope you all got value and you saw different angles of investing strategies. This is the Goofy Investing channel where we talk about investing into the stock market. But with that being said, take it easy and enjoy the rest of your week.